Well, good afternoon, folks, as we head into US trade on Thursday, the 17th of August. We'll start in the markets and see what's going on after we had the minutes out yesterday evening. Now, you can see European shares fall on sour or dour earnings, should I say, Fed minutes, sour sentiment. So, clearly, some negativity in markets over the course of last night into this morning from the minutes last night, which we did allude to in the earlier video today. Apart from that, over the course of the rest of the morning, we haven't had really much else to go off other than that last night, and we have not seen any sort of follow through, certainly up until this point of time. You can see sterling ticks higher, traders mull higher interest rate expectations, with strong inflation and strong wage data. I say strong inflation, still dropped lower, but still a bit of a beat on consensus in terms of the core CPI print, and also in terms of wage data. Kind of further fuels fears of the Bank of England continuing to hike interest rates past what markets may have hoped for. You can see the sterling, just apart from against the Japanese yen, up across the board. The Japanese yen higher across the board off the back of US yields pushing lower. You can see stock index is slightly higher, but European equity futures lower across the board. Now, we'll have a look at US stocks now in a minute, but the reaction we saw yesterday was strong dollars, weak stocks, strong yields, which is not what we are seeing anymore. Yields have not managed to gather any further upside. The dollar has not managed to gather any further upside, and certainly as of yet, stock indexes have not continued to sell off. And you can see this 10-year yield and this 2-year yield. The 2-year yield especially pulling back and rejecting off that 5% level and failing to break it overnight, and pushing lower throughout the course of today's European session. Now, that has been slightly negative for the US dollar. You can see a bounce back in the US dollar, or a pullback. We can see Aussie, Kiwi, Euro and Sterling all pushing higher. You can see dollar Swiss, dollar CAD, dollar yen and the dollar index all pushing lower. So broad-based US dollar weakness over the course of today's European session, likely driven by the fact that yields are also pushing back. Now, if you have a look towards stock indexes, the stock indexes have bounced back. Now, they do look like a bit of a flag kind of situation for a bit of continuation to the downside, but that will not play out if these yields keep pushing lower. Now, we do have the US open for trade in a few minutes time, so we'll have to see how they react to these bonds. Do bond yields, which are driving things at the moment, do bond yields continue to push lower? That should continue to prove supportive for equities and continue to be negative for the dollar. But you can see the reaction. They've not had the follow through. Certainly wasn't massively aggressive movements off the minutes last night. It's a much more aggressive move, lower in the dollar over the course of today than it was yesterday evening. So markets haven't believed the Fed for a long time. Maybe they don't believe it again, but they do see substantial upside risks to inflation and suggest that they may have to tighten further and have to keep monetary policy tight for longer than markets may have anticipated. But again, markets don't really seem to care about it. Bond yields, or certainly the bond market, doesn't really seem to care. The US dollar doesn't seem to care. Equity markets, it's having a bit of a slight bounce back, but as of now, they don't really seem to care and have the follow through that we may have expected coming into today's European session. So something to watch, or the thing to watch, is those yields, with gold pushing higher off the back of the pullback in those yields. Now, if these yields do continue to pull back, you've got the US dollar predicted to be weak, but the assets you would rather play would be dollar yen shorts, and you'd rather gold longs. Now, the pullback in yields, or the trend in yields, as you can see across both the 2 and the 10, quite clearly higher for some time, even back since the start of May. You've been pretty much on a one-way train off the both of these. And you look at the US dollar, not the US dollar, you look at the Japanese yen, it had a bit of a pullback off the Bank of Japan coming out and intervening and talking a bit hawkishly. But I can really see since the start of May, if you come back, you've had a big uptrend over the course of May and June. Into the July, you had a bit of downside, but then that uptrend has continued. Now, that has all been in line with this uptrend in US yields. The gold, for example, as well. If you go back to the start of May, gold's been trending lower. Did have a bit of a bounce back, but then it rolled over again. It has had a clear one directional trend. Now, some people, like, you know, will suggest, okay, maybe this is a bit overshot and we should look for a pullback, but this would be a genuine reason for a pullback. If these yields continue to push lower, gold longs, dollar yen shorts on a bit of a bounce back trade should be where you get the best expected return. So two trends that are, I don't want to say overshot, but two trends that are have been aggressive trends, and all trends are due a pullback at some point, but where you get the biggest pullback from certainly seems gold and dollar yen, where, yeah, I mean, maybe it is a bit overshot at this point in time. So pullback in yields, if that continues to push lower, then you would look to go long gold, short dollar yen. If these do turn around and do push back higher, a bit of downside for stocks and a bit of broad-based US dollar strength would be the way to play it. But there's no economic data out for the rest of the day. We did have the initial jobless claims, which are bang in line with consensus, so nothing too much to see there in terms of economic data over the course of today. We do have some retail sales out of the UK tomorrow. Now, if that does come out strong and goes in line with the relatively strong data that we have seen from the UK, or I say strong, higher than anticipated data we have seen from the UK, that should prove supportive for sterling. But those yields, what you need to keep an eye on into today's session. US 10-year looking like it wants to make an attempt through those lows, and is likely to be supportive for stock indexes, but gold longs, dollar yen shorts, probably the best trades to play off the back of that.